Hello traders, today is the 16th of June. My name is Neville Hornsey, market analyst trading, and today I'll be looking at the British pound. Okay, before we actually get into the charts, we've just had the Bank of England come out with a 25 basis rate hike, which was as expected. We did have some dissenters. We had Haskell, Mann, Saunders all calling for a larger 50 basis point rate hike. This is because CPI inflation is expected to average slightly over the 10% at its peak in 2022. So by the end of this year, they're thinking that we're going to get double-digit inflation. We've got a note here saying that they've dropped the guidance from May on future path of tightening, but at the moment it just seemed like the Bank of England are going to sort of follow everybody else and keep raising rates. They're just not going to do an SNB or a Fed and surprise the markets with a larger than expected rate hike. So if we just go back to the calendar, this morning we had Australian employment, which came out really good, 60.6 new jobs, way more than the 25k expected. Then this morning, at just after the London Open, we had a very hawkish SNB policy rate decision. They took it from the minus 0.75, and the previous was 0.75. Expectations was minus 0.75. They actually took it back up to minus 0.25%, so a 50 basis point rate hike there. This is very hawkish. And if we go to the utrain.com Forex heat map, we can see that the Swiss franc is actually the strongest currency across the board. After that, a 25 basis point rate hike by the Bank of England, the pound is the weakest. So we are expecting to see the pound versus the Swiss go lower. Going back to the economic calendar, later on today, we've got US building permits, US Philly Fed business index, and then the US initial jobless claims. So a little bit of US data to come out, which may affect the pound versus the US dollar. Just looking at the yields from around the world, we've got Japanese yields here, 10-year yields at 0.257, which is pretty much where they've said they're going to buy unlimited amounts of JGBs. The German 10-year yield, 1.721, a lot lower than the Italian 10-year yield, which is up at 3.994. This sort of disparity between the Italian yield and the German yield is of a concern to the ECB, which is why they had their emergency meeting yesterday. If we look to the UK versus the US, we can see that UK 10-year yield is currently at 2.465, whereas the 10-year yield from the US is at 3.372. So we're expecting to see the pound versus US dollar also sort of going lower. Looking at what's going on, we had the Euro versus the pound come lower yesterday on the back of what happened with the ECB. You know, we did have a pump up as expectations were that the ECB were going to be doing something, extraordinary. They didn't. Now we're seeing the Euro versus the pound rise again on the back of a weakening pound. If we go back to the pound versus US dollar, we are sort of pushing against the 1.2 again. If I go out to a weekly chart, we do have this range from 2016 between the 1.2 to 1.4.5. Obviously, we've been trading within that range, had a couple of spikes above or below, depending on, when we had the pandemic, everything sort of sold off on the pound here, rose back up, sort of back up to this balance area from beginning of 2016. 1.42 has been, the sort of ceiling on that range. If we were to break lower, measured move to the downside would take us below parity. So there's that to consider. Break below, we could get a break below, then a retest, and then a continuation lower. Obviously, the Fed are going to have to combat inflation, and they're obviously willing to raise by 75 basis points, on a knee-jerk reaction to some inflation data. If they see more of that data come in, maybe they'll keep raising rates because they are going to target inflation rather than keep their eye on the employment. They just need to see price stability by the sounds of it. So they're going to forsake jobs by the sounds of it. Even though they say they're not going to induce a recession, I think that's the way they're going to have to go. Well, that's the way the market also seems it's going to go. So looking at the pound versus US dollar, if we do break through the 1.2, then we are potentially taking the lows from 1.44 here. And then that sort of opens up, like I said, a move down towards parity. Going back to an intraday chart, obviously there is also the possibility that we just sweep a swing low from the intraday chart bounce off the 1.2, like I said, because it is traditionally a solid sort of demand zone. We do have equal highs here around 1.2208. So if we were to break lower, sort of trap some short sellers in there, and then rally hard and go higher based on maybe the initial jobless claims from the US today, then we've got this liquidity pool above the 1.22, and then we've got this imbalance here between 1.25 all the way down to 1.22. So a potential 300 pips to the upside before we get back into this range up here from the beginning of June. So that's what I'm seeing at the moment. Obviously, with the trend following strategy, can't take a trade just yet, but at the same time, by the end of tonight, we'll have a better idea of how the market has sort of seen the sort of recent data. We've had a few surprises. The FOMC obviously surprised, SNB have surprised. Now the Bank of England have come in as expected. So everything's pointing towards lower pound versus US dollar. We just need to see if they're going to go straight down or if they're going to try and sort of buy their way back up here to find some more sell orders at a higher price. If we were to get a lot higher, break through this balance area from the beginning of June, then we do have potential to get 1.26.5 to 1.27, get back above that sort of old resistance line. And then we're looking towards a larger potential move up to this sort of range here, where we've got the 1.3 up to the 1.32.5, 1.33 as a potential sort of balance area to sort of target as well. So, resistance could come at 1.3, but at the moment, I'm just going to step aside, wait to see how they attack, and if they do actually grab any liquidity above the 1.22. Just having a quick look through pound versus US dollar, like I said, 62% are trying to go long. So in reality, we should be trying to fade that sort of retail sentiment and be looking to go short. Pound versus New Zealand dollar, more evens. If we look at the actual price action, just going sideways, though the pound versus the Kiwi is weakening. Pound versus the yen, a lot weaker than the yen today. So we're looking to see if we can maybe get back into this balance area around the 160. And then if we were to carry on going lower, we've got 155.5 down here as a swing low to sort of show a change in market structure and possible change in trend. Pound versus Swiss, a lot lower. The pound, obviously, expectations are for higher inflation. Bank of England don't seem to be willing to do what the Fed have done, whereas the SNB have surprised to the upside with their sort of more hawkish stance. So pound versus Swiss franc selling off today. Didn't have a setup, even though the filter and trigger were good. So yeah, missed out on a Swiss franc sort of long there. Pound versus the Australian dollar, also coming lower. Got a double bottom down here, so looking to see if we can sweep the 1.718, go down to the 1.7. Yeah, so that's what I'm looking at the moment. Euro versus the pound. Yeah, still going higher. So I think the euro versus the pound goes higher. So anyone long that at sort of this sort of level is probably going to target the 0.88 and then see if we can short the pound versus US dollar at some point. And especially if we've got like a move down to parity, there's plenty of time to get in. All right, that's what I'm seeing on the pound at the moment. Good luck today, and I'll speak to you again tomorrow.